Good morning, everyone. Today we have the pleasure of interviewing public accountant Aguilar Florentino Eliseo, an expert in the financial and accounting file, who will talk to us about a very important topic for every company, the cash flow statement. Thank you very much for joining us today.
Thank you for the invitation. It's a pleasure to share my knowledge about this subject. As cash flow is essential to understanding the financial health of any organization.
To begin, Mr. Aguilar, could you please explain in your own words what cash flow is?
First, cash flow refers to the movement of money that enters and leaves a company during a specific period of time. It shows where the company's resources come from and how they are being used. In other words, it allows us to know the company's real liquidity and its ability to meet financial obligations in both the short and long term.
I see. So, why is cash flow considered such an important element within an organization?
It's important because it reflects the company actual financial situation beyond what appears in the income statement. A positive cash flow means the company can covers its expense, make investment, pay debts, and continue to grow. On the other hand, a negative cash flow may indicate financial problems and poor money management. Furthermore, analyzing cash flow helps managers make strategic financial decisions, such as deciding when to invest, reduce costs, or seek external financing.
Very interesting. Now, speaking about accounting regulation, could you tell us how the cash flow statement is structured according to NIF B2?
Of course, according to NIF B2, the cash flow statement is divided into three main sections. The number one is operating activities. This included the company's main operation, such as collection for customers, payments to suppliers, salaries, wages, and taxes. The number two is investing activities. This involve the purchase or sale of long-term assets, like the property, plant, and equipment, or investments in other companies. The number three is financing activities. This refers to obtaining or repaying funds from owners or creditors, such as issuing shares, paying dividends, or obtaining and repaying loans. Each section provides valuable information about how the company generates and uses its cash, which is essential for financial analysis.
Perfect. And regarding the way it is presented, what methods does NIFB2 include for preparing the cash flow statement?
NIF B2 establishes two methods, the direct method and the indirect method. The direct method presents the main cash inflows and outflows, such as collection from customers and payments and suppliers, in a straightforward way. The indirect method, on the other hand, start from the net income and adjust import items that do not involve actual cash movements, such as depreciation and change in the working capital, to determine the net cash flow from operating activities. Both methods are acceptable, although the indirect method is more commonly used because it is easier to prepare and directly connects with other financial statements.
Mr. Aguilar, we sincerely appreciate your time and the valuable information you have shared with us. Today, we've learned that the cash flow statement not only reflects the company's financial condition, but also serves as a key tool for making strategic business decisions.
Exactly. Proper cash flow management ensures the financial stability and sustainable growth of any organization. By keeping good control over cash inflows and outflows, companies can anticipate difficulties and take advantage of new opportunities.
Excellent insight. Thank you once again for your news. It has been a real pleasure speaking with you.
The pleasure is mine. Thank you for having me, and greetings to everyone listening.